Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index is managing to hold on to some bit of a gain of almost 0.5% there.
Nifty and the Nifty Bank, they are both, by the way, below the 20-day moving average.
The commission regulations are not there. They started paying much more commission than what it was stipulated in the regulations.
A stock may trade at 35 times PE, and that will be 5% premium to long-term average.
Opening rates about 0.25% higher, so much better start compared to yesterday, 26,025.
The headwinds which we faced last year, 2025, was very unusual.
They've hit the hammer into the ground. Today, it's going to take time to deliver results.
The Nifty above 26,000, so trying to end the year with a bang.
If you create your own technology in the area of defense, indigenous technology, the market will come to you.
Making the portfolio feel a little better on the last day of the year.
Well, closing out with some green, let's hope so, right? I mean, last 60 minutes of 2025, at least market hours, last 60 trading minutes of 2020, not last 60 minutes. This is Closing Bell. We're coming to you from the CNBC-TV18 News Online studios. I'm Prashant, with me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Not bad, right? The Bulls will say this is better than perhaps most hoped for, because you've got a nice upward drift throughout the session.
Yeah.
The Nifty's reclaimed 26,000, not just 26,000, actually 26,100 for what it's worth. And, well, it has a nice ring to it. We're practically at the all-time high, just 0.5% away. So, managed to climb several walls of worries through this year, but there are more that still remain.
Some walls we've not yet climbed through. Right?
Leaving some for 26.
Okay, well, if you're just joining us, right, I mean, in the last 30 minutes or so, we've presented some programming on Vodafone Idea. We'll just look at the stop before we go any further, because that is something which we will continue to focus on. Stock's down 15% now, 10 rupees and 30 paise, 10 rupees and 20 paise, as things stand right now.
Prashant, just to sum it up, and I mean, you've been speaking to a whole panel of experts and legal luminaries as well.
Yeah.
So they've got more time to pay the due.
Yeah.
But I guess the thing is that the dues, as of now, still remain at a little over 87,000 crores. So could that be explaining the bulk of the disappointment? There's no waiver. There's no relief saying, okay, this much is waived off, you don't need to pay the amount. The amount remains the same.
I was not really sort of in tune with what the exact expectation was, but my view, which I said in the morning on Bazaar as well, that if you there were workings which I had. Basically, if you take the most optimistic of scenarios in terms of the relief, now that the relief has come and maybe we'll get details in the briefing, but even if you put all of that in and actually looked at what the equity value will work out, it was kind of 10, 11, it ran from 8 rupees to 12 rupees.
12 rupees, yeah.
So it's kind of tough to justify if you just look at the numbers. Sentiment, etc. is another thing. Okay, government stepped in and, third viable player, now another 10 years and etc., etc., etc. Maybe, I don't know, maybe the briefing will have more details, right?
Yeah.
Like, for example, the note says that the DOT is allowed to do another audit. So the number does not have to be 88,000, that 87,000, whatever number. The DOT has the option to do another audit, which is the government of India, and based on some guidelines, and that number can move. It can be lower. It can be lower or higher. Correct.
Lower or higher. So the thing is, the uncertainty to that extent, I mean, there's no immediate relief in the form of a lower payout. It's a deferred payout. That's what we know as of today, I suppose.
Unless the
DOT committee decides that...
it could be lower, 100% it could be lower. But for now, I mean, what we have, of course, is the fact that, I mean, we had a very, very sharp move in terms of the price, and we are back at about 10 rupees and 25 paise at this point in time. So that's Voda idea for you. Indus Tower is down about 1.25% or so as well at this point in time. Okay, let's just quickly run you through what's coming up here. Voda idea, of course, is one, but the markets are also in focus. We're above 26,100 in the Nifty. Small caps are outperforming. Broad-based gains across sectors. Metals, PSU, private banks are leading the way. Steel stocks, of course, doing well once again. Actually, it's steel, PSU banks. It's a kind of a repeat of what we saw yesterday. The only new index which is sort of joined into the mix is the oil and gas space. And here you got names like HP, BP, IOC, MRPL, CPCL, which are doing very well. With steel, of course, on your screen, it's the safeguard duties which have been imposed, which I think are leading to a bit of a lift here for many of these names. How should you position yourself? That's the question. Mitesh comes in with exactly that perspective. Mitesh, what would you do? You know, in the morning, I was asking you whether around that 40-day where we were, may make sense to take some exploratory longs. I'm not sure if you trust this move as we go into the new year.
I think, the idea is that the market was range bound and I suggested if we get entry around yesterday's low, which we didn't get, that will be a buying opportunity. I think still, the market needs to get past 126, 200, 220. And, once it does that, then I think I would even look at a level of around 26, 400 odd as the resistance coming from the upward sloping line, joining all the tops in the last 3 weeks. So the market isn't weak, but the signs of a breakout are not there. We are now close to about 26,200, 220 zones. So I would advise traders as we get there to take some profits over there. In case we get past that, then I think another 200 points could happen, and then a breakout finally. So there's still time for that. But for the timing, the good news is that it's not weak. Metals are shining very well, and a lot of other stocks are doing good. So I have two long calls. One is Tata Motors Personal Vehicle or TMPV. That's a buy with a stop at 361 for targets of 378. And ONGC is a buy as well. Keep a stop at 235, look for targets of 249, 250.
Mitesh, just before we let you go, any advice on Voda Idea? Because today's fall, and from 10% it's now gone to 15% freeze, I think. For people, it was always going to be volatile, but it's just very severe, the pace of the fall. So any advice here?
I think the last significant breakout which happened for Vodafone Idea was around 9.7, 9.6, and I think we are heading towards that. I think in case we hold that, then I think it should be all okay and we could retest 12 odd levels. But for the time being, I'll keep a watch on 9.7, 9.6 zone.
Yeah, okay, got it. Mitesh, we'll come back to you for more. Thanks very much. There's a price hike from Hyundai Motors, 0.6%. Average is 0.6% across models from 1st of January 2026. Okay, well, steel is in focus, right? There's the safeguard duty which has come in, different rates over the next 3 years. Sudarshan is here with details on this. So over to you.
So long-awaited announcement has finally come. If you remember, in the month of April 2025, DGTR, that is Director General of Trade Remedies, had announced temporary safeguard duty, and that was applicable for 200 days, and it expired in the early part of November. Now, government has come out and extended that safeguard duty for the next 3 years. So in the first year from that would be applicable April 21, 2025 to April 21, 2026. And for that, duty is 12%. For the second year, duty comes down to 11.5%. And for the third year, duty will be 11%. Remember, this is done to safeguard the domestic industry, which was feeling the pain from the imports that were coming in from countries like China and Vietnam. And to protect that, to protect the domestic industry, government has announced this safeguard duty for 3 years. This was a long-awaited demand from the industry, and that is being taken very positively. You can see top nifty gainers, JSW still up almost 5%, Tata still up. Even in the mid-cap space, if you see JSP, Jindal Stainless, Kalyan States, all the whole set of names are trading with healthy gains on the back of this announcement. And because of the reason is it's being taken positively, and it was a long pending demand of the industry.
Okay, all right. That explains the excitement and the move on the stock. So thanks for that. Let's discuss this and a lot of other themes with our guest on the show today. We've got Siddharth Khemka joining in from Motilal Oswal. Sid, good afternoon and season's greetings. I think you might be all set for a party, right? But then tomorrow's working, market's working. You're going to be making it to office tomorrow?
Good afternoon and season's greeting to you and all the viewers. Definitely we have to work. Our markets is among the few globally which are open on 1st of Jan. So we'll definitely have a party in the evening, but it will be a limited party.
Yeah, I think a lot of us have grayed our hair or lost our hair, wondering why we are the only market open on the 1st of January. But I think 2 decades and no answers, right? Anyway, so we'll let that grouse continue. But Siddharth, let's start with all the newsmakers of the day. And the steel stocks, like Sudarshan was just telling us, finally that safeguard duty has come in. And it's a very clear roadmap as well. Next 2 odd years, how that duty will play out. Your thoughts? Does it make sense to buy any steel stock? And if yes, which one do you like?
Yeah, definitely. I think the global commodity rally is there for 2026 after the precious metals that had moved up. I think the base metals are something that is likely to see the uptick in 2026. The dollar index continues to remain weak. There is a lot of impetus as well as stimulus in China to revive growth. That is also helping the base metal prices. And I think if you look back home, I think there is a lot of case after 2 years of low capex from the government. This year, there is a lot of hope that the government capex spending should also increase. That is also positive for the metal stocks. I think with this safeguard duty in place, makes case for being positive on the ferrous after the precious metals. I think aluminium is something which was doing well. Now I think the ferrous side is also likely to see the uptick in terms of the benefit of the safeguard duty, especially from the Chinese import. So what we like Tata Steel, where we have a buy rating, target price of 210. The company has its long-term strategy focusing on volume expansion, value-added products. I think Indian business is expected to continue to do strong performance, plus the added benefit of a likely improvement in the European business, which could add to the overall upside to Tata Steel.
Okay, that's a call on the ferrous space. On the whole Vodafone Idea debate, we were just discussing this, Prashant and I, to make sense of this 15% of knee-jerk reaction on the stock. Though they've been given more time, but what's your sense? I mean, what has triggered that profit-taking or that disappointment today?
I think markets were factoring in at least a bigger or a longer repayment moratorium. I think that is what is a key thing that is taken the market by surprise. Also, the fact that I think, again, there were some quarters in the market which were expecting that some waiver in terms of the dues could be provided. Now, as you were rightly discussing, and I think Prashant was highlighting that the DOT will have the committee to discuss and reevaluate the number. So they have not given the upfront, which definitely could be much lower than the current numbers. So I think the stock had moved up. There is some bit of profit booking after the news, and I think there is some bit of disappointment on the moratorium period, the repayment schedule, and no clarity in terms of the waiver or discount to the actual repayment amount. Nonetheless, I think this entire event should be taken positively once the market reacts today.
I guess it's also human psyche, right, Prashant? It's like if you have a massive amount of rent, let's say, overdue, and you keep negotiating about when to pay, I'll pay next month, or I'll pay the month after, or the quarter after, and all that's fine. But what really gets you excited is if the landlord says, okay, fine, let's just come to a middle ground, let's just settle at a slightly lower figure, right? That's what gets one super excited if you have any outstanding amount. But that's human psyche. We can all want and wish, but ultimately, what we've got today is that you pay, but we give you a longer payment duration. The rest we have to still discuss.
It's like EMI and payment.
It's like EMI. Like someone
duration of the
tells
loan.
You, this car loan, it's okay. 30% is cancelled. No need to pay. Then you get super excited.
Well, let's just stay with steel, but in a slightly different way. We're talking about graphite electrode makers, right? HEG and Graphite India. Both stocks are surging as we speak. Vivek is joining us now to tell us the key triggers. What's at play? Vivek, take it away.
Well, that's right. HEG and Graphite, in fact, both of these names are up almost 30% from their recent lows in November and December. They're doing very well. Now, a couple of important points. Also, a key trigger that comes out from tomorrow. So the first thing is, European Union come tomorrow. That is the new year, will start rolling out CBAM. CBAM is what? Carbon Border Adjustment Mechanism. So basically, steel and aluminium imports that go into the European Union will be taxed on the volume of emissions that they produce, during the course of production of steel. So what will actually happen as far as steel makers and steel exporters, especially for Indian companies, are concerned, it will raise both landed costs and also start impacting the margins, given the fact that they will have to start taking the hit. On the other hand, the move actually incentivizes cleaner production of steel and improves competitiveness of low carbon producers. So where do HEG and graphite come into the picture in this particular case? Remember, both of these companies produce graphite electrodes used in EAF steel making, which is electric arc furnaces, which is a much lower emission form of producing steel compared to the traditional coal-fired furnaces. Now, there's a recent MK note that came, sometime in December. They're saying that Indian graphite electrode producers are embarking on a fresh capex cycle to capture structural uplift as far as EAF-linked demand is concerned. They're saying even a 5 to 7% increase in EAF share globally would translate into an additional 30 to 35 metric tons of EAF steel output. They highlight a few key triggers as far as HEG and graphite are concerned. Number one, China's anti-involution shift that aids Indian steelmakers, Europe's CBAM rollout, something that we just spoke about, and also globally coordinated policy resolve aimed at lifting the steel industry currently, which is experiencing a prolonged slowdown or a prolonged slump. All of these factors aiding the kind of sharp up move that we've seen in HEG and graphite.
All right, Vivek, very comprehensive. Thank you very much for that. Very useful. Siddharth, do you have coverage here on these names? Any thoughts? Graphite and HEG.
So, Prashant, unfortunately, we don't have coverage, but I think with the view turning positive on the entire metal space, I think the largest use case industry for them is the steel companies, and I think that is where the demand is. And some of the other use cases are electric vehicles, the batteries, EV batteries. I think overall the view remains positive, but unfortunately we don't have coverage.
Okay, all right, got that. Let's just see the mid-cap index, by the way, is right in step with the Nifty with a gain of about 1%. So we've discussed some of the active parts of the market. And that is the steel space. HPCL is really flying high, 6% higher. There's Gujarat Gas as well, which is 6% up. Among other names, Chennai Petro, by the way, from the oil and gas arena, again a name which is up 6%. So some of these oil and gas names are really up and about. Okay, one more stock that's been in the news today is Bharat Forge. I'm just trying to see where it is right now. It's still, retaining a gain of about 1%. So it's not a big move or a breathtaking rally, but it's been a day of small gains for Bharat Forge. Now, the company won a relatively large order yesterday. It was a little over 1,600 crore rupees, 1,662 to be precise, for the supply of CQB carbines to the army. We caught up with Baba Kalyani to understand the relevance of this, the importance, the margins, and when the money really flows in. Listen to what he had to say.
First time Indian designed products and developed products are competing with foreign products and winning. I think that's a very significant milestone that we've been able to achieve. We don't have any external collaborations here. It's all internal. This done right from the raw material to the finished product is all made in our plant. We have set up a special plant for this in Jejuri. It's a plant that has got a capacity to produce about 50,000 to 60,000 weapons per year. But easily, it's a modular plant. It can easily be doubled, tripled based on the requirements that are there. A lot of interest from companies abroad in terms of wanting us to produce weapons for them here. So that's another thing we are beginning to see. And those quantities may be even bigger than the quantities that we are looking at for the Indian Army. We are looking at export orders for artillery guns, which are in process, and hopefully they will get materialized in 26. Currently, we have an order book of almost, I would say, if I take the carbine order into consideration, almost about 10,000 crores. And we hope that by the end of 26, this order book can go up quite dramatically to at least 12,000-14,000 crores, something like that.
All right, so that is Bharat Forge. Stocks had a lukewarm year, but 15% up over the course of the last 12 months. That's today. But it's still nowhere close to the peak. It's seen higher levels of around 1,800 earlier. So that very quickly, a word on Bharat Forge, whether it would at all make the cut for you if you want to play the automotive space or the defense space. And then a quick word before you go on all of these oil and gas names, from Gujarat Gas to Chennai Petro, everything, HPCL, everything is bouncing. Not quite sure if there's any fresh trigger. So quick thoughts.
Yeah, Surbi, quickly on Bharat Forge, definitely the defense aerospace is likely to be the key growth driver. They have a good order book, 11,400 crores executable over the next 3-4 years. Aerospace is looking good, military, naval applications. The key concern, however, is the US CV's outlook remains weak and only expected to revive by the second half of the next calendar year. So H2 of CY26. So in the near term, we believe while the growth from defense could be good, the core business is likely to remain lackluster, and hence we have a neutral rating, kind of wait and watch for the CV cycle to see some recovery, and then maybe look at it more incrementally positively. So a neutral rating on Bharat Forge. In terms of oil and gas companies, I think there is a slight bit of expectation that the Russia-Ukraine war, there can be a peace deal, and hence crude oil prices can come off, and hence I think the oil marketing companies look attractive. Beyond that, overall as well, we like oil marketing companies. They have been on the up cycle. The marketing margins have been pretty strong, and I think among them, HPCL is something that we like from the oil marketing companies.
Okay, all right. Siddharth, we'll leave it there. Good speaking with you. Hope you party hard, not too hard. And Happy New Year to you. And
Happy New Year to you.
Thanks very much for being with us today and always. We take a quick commercial break here. We'll come back. We will, have Deepak Shenoy joining us on the other side. So that discussion, he's founder of Capital Mind on the other side. Stay tuned. Welcome back. This is about 20 minutes in and about 40 minutes to go for the close in terms of trading action for this year. And then we'll be talking about 2026 just like that tomorrow morning. The Nifty, by the way, for the year is up, 10%? 10.7, 11%, right? So it's not bad at all. From a foreign investor perspective, of course, you knock out the rupee depreciation. So you got to do that. But otherwise, it's not US is up 22, NASDAQ is up 22. and NASDAQ is not even the best performing market. Actually, pretty much everything is done better than the US, and that's saying pretty much all large markets have done, let me contextualize, have done better than the US, and the US is up that much. So it's been a great year, and it's been a so-so year here in India, and some would say tough year, especially if you look at mid caps, small caps, and so on and so forth. Deepak Shenoy is with us, founder at Capital Mind. Deepak, welcome to the program. Thanks very much. Season's greetings to you. Appreciate your time here with us as always. Before I get to here and now, I wanted to just kind of maybe take two questions on Mr. Buffett, who's stepping down today. Deepak, he's of course served over 60 years as at the helm of Berkshire, and 95 years old now. And he's sort of Hormuz had this data earlier for us in terms of the conglomerate that he's built, the interests that Berkshire has, and of course, I mean, the very, very large shoes that Greg Abel, the successor, is going to be stepping into. Yeah, that's the man. 63 years of age, Canadian nationality, and it's going to be something. I mean, I think the story doesn't need to be told. Everyone is aware of what Mr. Buffett has done at Berkshire. And of course, he's more than anything else. I think I remember at some point, and he's been such a prolific writer, but also, of course, so much of him on video, which we are fortunate to have. And he was asked one time, how would you like to be remembered? He said, well, as a teacher. And I think that is perhaps the greatest gift that Warren Buffett has left for the investing world broadly. Deepak, some very smart, intelligent people do say that maybe Mr. Buffett's style of investing, perhaps in this very rapidly changing technological kind of world that we are in now, perhaps is a bit outdated. The principles, no, absolutely not. I mean, they remain the same, but his style of investing, I don't know if you have any thoughts on that or anything else you'd like to reflect on.
Oh yeah, Prashant, I think the biggest thing that he's left for us is the treasure trove of knowledge that he has imparted over these years, right? So it's not so much the exacting of the investment style, it's the discipline of investing that he's brought across. A lot of times he does things differently from the ways he says things. So he might say that you should invest primarily or only for the long term. But his own investments, he's had, relatively short-term investments, as many as he has had long-term investments. So it's a bit of this thing. But actually, what he's trying to tell you is, when you start out investing, you think of an asset as something that's a long-term story, and then eventually that will, if it doesn't work out, then you should be quick to get off as well, so that you can maintain your long-term portfolios of stocks that you really like over a long term. There is, I think, a few of these nuggets of advice that I think I would disagree at face value, but I think in spirit he has the right approach or thought process. The nature of investing has changed. It's become more technology oriented. He's kind of missed that technology bus because he's more focused on investments that have, been around for a while. So they have the ability to generate high ROEs right from the beginning when he starts investing, and they're valued at relatively low prices. Whereas in today's day and age, you find that the more growth-oriented companies are valued at much higher, where they don't have ROEs currently that actually demonstrate themselves, but eventually they do once they grow to a certain size and they can demonstrate that they have reached a certain layer of excellence, like in Google or in Apple and things like that. I feel that one of the reasons why it's so difficult to fill his shoes is he isn't actually quite afraid to keep that much cash available and ready for investing for the right time. Even though it has taken him 10 or 12 years, he doesn't mind staying on that. I think the other managers will find it more difficult because they weren't the founders of this company, and they perhaps may not be able to live down the public eye as much, because they haven't had those 40 years of success that have allowed them to say, listen, I know best, and I know I will wait for the right opportunity. But those are the things that I think the next set of people will find difficult. Buffett has been fantastic. Sorry.
Yeah. No, Deepak, great points. And I was thinking some of this earlier. The applicability, I wouldn't say relevance. I'm sure value investing will always be relevant, but the applicability and how do you apply value investing in today's market context, whether it's US markets, whether it's our own markets. And we were discussing this with Vineet Samre in the morning, actually, in our morning show, that we're living in very different times and very different markets, where, like you said, stocks which exhibit growth will be rewarded, and things will overshoot on the upside, and a lot of great pedigree, value companies and value stocks end up being value traps. Case in point right now could be, say, the FMCG universe. I mean, there's no issue with corporate governance, there's no issue with cash, but the market simply doesn't reward you. So how do you apply Mr. Warren Buffett's philosophy towards investing in markets which have taken on their own color and their own texture now in 2026 as we enter the new year?
So no predictions here from me on 2026, Survi. But here's the thing. Value stocks exist primarily around in the small and micro cap areas, where a person like Buffett would find difficult to invest because he has so much money. But not all of us have so much money, right? So we're all relatively smaller players. We can actually invest in some of these smaller cap companies and find value in those players and make a tremendous amount of return. Now, of course, what you can make at 1 crore of capital or 10 lakhs of capital is different from what you can make at 10,000 crores of capital. You don't have 10,000 crores of capital, then you should think of what you can do. Therefore, the value investing framework is not entirely lost on everybody. I think the smaller investors, the smaller fund managers, including people like us, will probably still be able to access some of these value opportunities simply because we have the size that allows us to participate in them meaningfully.
But it's also, Deepak, size is one thing and how much money you can, put on the table is one aspect. The other thing is, to be a value investor, you have to deal with FOMO. And for people who, even at a small scale, try and be value investors and emulate some of this, time-tested philosophy of Mr. Buffett, how do you deal with the fact that my portfolio simply hasn't performed? The market has moved on. People are sitting on 20-30% gain.
So here's the thing also, Survi. I think the FMCG players that you mentioned, they're not actually Buffett-type values.
No, I was just giving an example of relatively lower valued stocks in the market.
Absolutely.
Sorry, Deepak, that is why, that is why there's only one Buffett, right?
That's also true.
As simple as that. He says, right, if you, so many famous sayings, he says if you have 180 IQ, you can sell 80 points because you don't need 180 IQ, you can do with 100. But that is also his folksy, humorous way of kind of downplaying his, I'll tell you what, with Buffett, and you asked the question on investing, but to me, and I think to a lot of people who are Buffett bucks, so to speak, it is basically a gyan about life. It's not so much about investing. Is
stocks and markets.
Over the years, it's become investing is just one part of it. But his approach to, everything from from raising kids to what you should, all kinds of facets, right? There are so many. There's a fantastic book, which is, I don't remember the name now, it's a black covered, thick book. It's organized as a conversation with Charlie Munger and Warren Buffett and what they've said over the last 50 years. Yeah. And it's been ordered into question and answers. And most of it is not about investing. It is all about, life and so on and so forth in general. So, but that is why he is who he is. Deepak, just one other thing, right? One other observation. I don't know if you found it, but it doesn't get talked about too much when we all talk about Buffett and all of that, right? The guy is
it's Buffett and Munger Unscripted. I think that's the book, and I remember because Mr. Ramesh Damani referred to the same book that you're talking about.
No, it's not.
It's not that one?
It's not that.
Okay.
It's a librarian, and I don't know. I'll get the book.
We'll get to it.
Deepak, the guy is just too smart, yeah. The IQ can't, when you listen to the guy talking, and we all say, well, we can do what Buffett does, but the point is we ignore a very basic starting point. I think everything else aside, the compute power is something else, is off the charts. You could actually, some of the earlier interviews and videos, if you watch of him, the pace at which he's articulating complex ideas, it shines through. And I don't think that gets enough credit, although he himself downplays it.
No, I think, to be honest, he's that sharp at 95. Yeah. I went to one of his annual conferences about a couple of years back, and I remember a young lady asked him, what she should invest in. She's starting early in life, and investing. What should I invest in now that will give her a head start? And what he said was, invest in yourself. Effectively, what you do now is going to give you more money than anything else that you invest in. So you will earn a lot more that by just investing in yourself. And I think that's a great idea. Your first crore comes from your salary, your income, not from having invested in other people's companies. So I think that's a really wise insight. He's smart. He's so smart that sometimes it shocks you about how well he's able to think even at 95. I forget what I said yesterday when I'm just about 50. So I think it's remarkable.
No, I think we've all been lucky and hope he has many more years. He's just stepping off Berkshire, but I hope he uses the free time he has to do many more interviews and especially the long form ones now. And I think it'll be a delight. Just treasure trove of information and wisdom out there. Deepak, just a quick bit on markets now as we enter 2026.
Prediction time.
Forecast prediction, although Mr. Buffett would scoff at it.
And he said, I'm not going to do it. Deepak also said, I'm not predicting, but come on.
It's a time to predict, but honestly, if you told me that at the end of 2025, that India would have a war with Pakistan, the rupee would fall so much, the RBI would cut rates by 125 basis points, and yet the 10 years bond yield would not significantly improve, then the US would cut rates and its long-term bonds would react negatively in comparison. The gold and silver prices would reach all these. I would have been, laughing and saying, what's wrong?
It's like the year that no one could predict. That's what I call 2025, the year that no single human being could ever predict, I think. And that's what one learning. Don't try and keep second-guessing markets. They will do what they need to do. But go on. So where does that leave us?
No, that leaves us with only one thing. Despite all of these things, the Indian markets have gone up. This is a point to say, don't try to predict. Try to respond to the market instead. Things will work in certain directions. Things will not work in certain directions. You have to change direction midway. I think that's what the story of 2026 is also going to be. You may get a lot of your predictions right, but the market may react in a completely different way from what you comprehend. And that's not a bug. That's a feature. That's how markets are. They are unpredictable for a reason. Is that eventually your idea is to get with the tide. In that sense, I tend to follow prices a lot because prices give me feedback for what's happening, sometimes more than we know. And I think we've institutionalized that in a way by creating algorithms as well. But I think data is going to become an even more bigger part of what we decide on what market feedback really is. And my lesson in 2025 has been don't try to second guess. I think my thing in 2026 is expect the worst and still let the markets tell you where they're going to go even when the worst happens.
Expect the worst, hope for the best. That's the oldest, I guess, piece of wisdom in the book. Thank you so much for that, Deepak. Wish you a very, very happy, pleasant, prosperous 2026, and we look forward to more conversations in the coming year. Thank you.
Thanks. A very happy 2026 to all of you at CNBC-TV18 and to all of your viewers as well.
Thanks a lot. Well, with that, let's quickly go to Ashmit because he's got a very busy, couple of hours ahead of him. He's tracking all the developments with respect to Vodafone Idea. There's going to be a cabinet briefing as well. Ashmit, so let's just recap what we know so far.
Well, the cabinet briefing as we speak is underway. We're yet to hear from the Minister Ashwini Vaishnav on this latest decision. But as far as from what we're picking up after speaking to sources is that there are 4 key takeaways that the cabinet has approved with respect to Vodafone Idea and its AGR dues. Number 1, there will be a freeze as far as the total AGR payout is concerned at an amount of 87,695 crore rupees, and that's as of 31st of December 2025. That's the first key takeaway, a freeze on the amount in question. The second is that for the next 5 fiscals, beginning FY27, there will be a moratorium on any payouts as far as Vodafone Idea is concerned. So for the next 5 fiscal years, no payouts are required to be made by Vodafone Idea. That's the second part of the relief package that the cabinet has considered and approved. The third is that the payment schedule for the confirmed amount will begin as late as FY32. It will be a 10-year payment schedule that will extend all the way till FY41. So that's the third leg of the relief that has been proposed by the cabinet. And the fourth and the final, and this is perhaps the most crucial one, the long-standing demand of Vodafone Idea. They have been arguing that, look, there has been double counting of a lot of entries. There is arithmetic errors as far as computation of the overall AGR demand is concerned. On that one particular front, what the cabinet, we given to understand, has approved is that there will be a government-appointed committee that will go ahead and reassess and recompute all the AGR dues in question, and only after that will there be a final amount that will be put across to Vodafone Idea. So clearly, 4 legs of this relief. Number one, the moratorium. Number one, the freeze on the amount. Number 2, the moratorium. Third, the 10-year payment schedule. And fourth, and perhaps most importantly, a reassessment exercise is now to begin with a government-led committee. Back to you.
Ashmi, thank you very much for that. Some more decisions at the bottom of the screen with regards to what the cabinet has decided. But the big one, of course, has been a Vodafone Idea. We'll take a break. We're back. We'll tell you, we'll get you some trading ideas. There's 20 minutes to go to wrap out 2025. Stay tuned.
Welcome back. The market continues to be in cruise control mode on the last trading day of 2025. Let's figure out what's happening in the F&O space. Mangalam brings us the latest from day one of the new series. How's it looking, Mangalam?
Day one of the new series and the market straight out of the blocks. You know, we have the Nifty, which is closing in on the 26,200 mark after having crossed past important levels this morning, the 20-day moving average in particular. The Bank Nifty doing well, the mid-caps as well. What's heartening is that portfolios today might be feeling a lot better. I don't know how much of that is on account of NAV propping and the fact that it's the last calendar day of this year as well. But importantly, the broader markets where the advances are far outnumbering decliners. And that's after a very long time that we've seen that over the last 5 or 6 trading sessions, we've seen on an average 17 to 1800 stocks in the red for about 7 to 800 stocks in the green. So that's positive. But let's see how much of this up move sustains. The reason why I say that is because a large part of this up move is on account of the call writing at 26,000 and 26,100. All of that is now coming a little undone. So those call writers have been caught on the wrong side. That's propelled the markets higher. Now put writers are getting a little more aggressive. So we have 26,100 put, which has seen a lot of writing. 26,000 put was fairly well written all through the course of the day. Now the out of money puts, which are rather in the money puts, which are 26,200, they are seeing some writing, and that's something that we will monitor because call writers are active at 26,200 still. So can the market sustain above 26,250 or 26,260 is something that we will track, because as put writers are getting aggressive, the put call ratio is getting overheated as well. So the put call ratio is at now 1.37 as compared to 0.09. So just monitor the Nifty put call ratio. And finally, a bunch of stocks that I'm tracking: HBCL, IOC, BPCL, all these oil marketing companies seeing a lot of long positions being added. And we have TCS. IT has been an underperformer today, and like all through this year, TCS is seeing some shorting activity.
Okay, all right, got that. Mangalam, thank you very much for the latest from the F&O market. So those are the cues that we are picking up at this point in time. Let's quickly move on, and we're still getting more announcements. Nothing on Vodafone Idea, actually. More approvals in terms of highway projects, etc., from the cabinet meeting that's underway. But for the timing, let's get some final trades. Final trades for 2025. Mitesh, what do you have for us?
Yeah. BTSC and Petronet, I think, oil refinery is doing well. So Petronet is also, something which is kind of moved towards the high of the day. BTSC with a stop at about 281.5 for targets of 288. And Shree Cement is the other one. That's, also moved up nicely. Good breakout here. So keep a stop at about 26,420 and look for a target around 26,900.
Okay, all right. Thanks very much for that, Mitesh. Well, I think we can bring in Yash now, who is joining in. We've been following this insurance commission story over the last couple of days, and the Secretary of Department of Financial Services spoke with our colleague Sapna Das and said that, well, IRDAI is essentially going to come out with draft regulations on insurance commissions. Now, what we're doing here and what Yash has done is looked at data from IRDAI annual report for 2000. This is data for 2025, Yash, right?
That's correct.
In terms of what are commissions paid, and then contrasted that against things like number of policies, number of new policies and premiums, etc. Take it away, Yash.
Well, Prashant, we've been asking this question that why this, this particular action as far as commissions are concerned. And as far as the action itself is concerned, the obvious answer is simply that higher commissions technically mean higher premiums for policyholders. But there's a very interesting answer which also lies in the data. And that answer essentially is that higher commissions have not resulted in higher policy growth or higher premium for insurance companies. The numbers very clearly state this. In FY25, and as you said, this is as per IRDAI's annual report, in FY25, the commissions paid by life insurance companies as a total industry, that increased by 18%. Number of policies in the same year fell by about 7.5%. Premium in the same year for life insurers increased just by about 7%. Now let's look at private life insurance companies. The commission paid by private life insurance industry, that increased by 39%. But at the same time, policy growth was just about 5% and the premium growth was just about 12%. As I said, this is as per IRDAI's annual report. Let's look at general insurance industry. Totally general insurers, the commission which they paid in FY25, that increased by 20%, but number of policies, that increased just by 16%. Premium increased just by about 6%. As far as PSU general insurers are concerned, their commission increased by 27%. Number of policy growth was just about 5%. Premium growth was just about 5%. Private insurers, the commission which they paid increased by 16%. Number of policies grew by 23%. The premium growth was just about 5%. Finally, standalone health insurers, the commission which they paid, that increased by 24%. The number of policies issued, that grew just by about 16%. Premium also grew by just about 16%. So, of course, the clear answer as far as action on commission is concerned is to reduce premiums of policyholders. But even in the year where commissions increased significantly, it did not reflect in policy growth or premiums for insurance companies.
Okay, all right. Yash, thank you very much for that. So that is the data. Stark, very, very stark actually. Mayuresh Joshi is with us, Director Research at MarketSmith India. Mayuresh, season's greetings and I guess last 12 minutes of trade for 25. Any reflections, Mayuresh, on 25, things you should have done, things you shouldn't have done in terms of stocks?
Afternoon, Prashant. No, season's greetings and wish you and everyone at CNBC-18 and all the viewers a very prosperous, peaceful and healthy 2026. I think reflecting on 25, I think tough year, specifically for the broader markets. At MarketSmith India, we are growth investors, so we chase growth and momentum. So we did see the initial few months where momentum was very, very strong, but it actually lagged off by the end of the last quarter. And therefore, I think all the gains that we had probably made had substantially reduced. So I think the lesson 2025 was that once you're done with your risk reward targets, I think book it and probably have money in the bank.
Okay, all right. Hi, good to have you in, Mayuresh. So now tell us, what is the bright new idea for 2026? Give us a rocket stock, something that will go up 100%. That's what everybody wants, right? It boils down to that at the end of the day.
Surabhi, I hope I knew that.
If only it was that simple, huh?
Exactly. So I think a few sectors that we are seeing at MarketSmith India in terms of our thematic sectoral analysis that we probably do. I think a few sectors which are coming into a rally attempt are consumer discretionary, they are FMCG, and it's a combination of reality and infra. And therefore, I think it's a mix of stocks that we've got on the watch list from all these sectors put together. BFSI selectively should continue doing well in our opinion. And therefore, I think I've already spoken about stocks like a Bank of Maharashtra or a Shriram Finance from the NBFC universe. But certain stocks in these themes that we are looking at from a thematic perspective over the next few months, FMCG, I think Tata Consumer is something where our belief is Indian beverages, Indian food business, including Sampan, should probably hold up quite well. Volume should hold up, margin should be reasonable, input costs are relatively benign. And therefore, I think FMCG selectively should continue doing well. In terms of consumer discretionary, Vishal Megamart is something that we continue liking. Our own sense is that Q2 numbers have been relatively strong. As discretionary spending improves, specifically in tier 2, tier 3 cities over the next few quarters, with a mix of government initiatives, a mix of GST rationalization and discretionary incomes going up because of higher MSPs with key elections happening over the next few months and next few quarters. The discretionary pattern should improve, benefiting and aiding Vishal Megamart, which has a good mix in terms of apparel, FMCG, and other FMCG products as well. When it comes to reality, Phoenix Mills on declines is something that we continue liking or keeping a watch out for. Our sense is the kind of fit outs that they've probably done so far, the rent escalations are probably on track and they should probably be able to suffice a large part of the analyst community expectations, which makes us largely believe that the kind of additions that they're probably doing, both in terms of mall additions as well as the hotel addition in number of keys with calibrated capex should aid return ratios. I think a few stocks and a few.
That's Vishal. That's Vishal Megamart, Phoenix Mills, and there's one more that you mentioned, right?
Yeah.
Vishal Megamart and Phoenix Mills.
Yeah.
2. Okay, we'll work with 2 for now. All right. Okay, stay on, Mayuresh. We need to take a very, very quick break. We'll be back and we'll count down the final few minutes of trade in 2025. Welcome back. So we've got a good-looking screen, almost 200 points up on the Nifty. It's not quite at the highest point of the session, but it's a good close. And for what it's worth, you want to end the year filled with hope. Mayuresh, I just want to talk about some of the gainers of today. The entire oil and gas space is buzzing quite a bit. HPCL 6%, Gujarat Gas 5%, MRPL 6.5%. I mean, I don't know if it's just thin trading and stocks showing these outsized moves, or whether there's any fresh trigger that's coming up ahead in January. Your thoughts?
Well, for Gujarat Gas in particular, propane prices are up, Surabhi. So I think if you probably look at the arbitrage between propane prices and natural gas prices, that has probably come down to a large extent. And therefore, I think a lot of the unorganized players in Morbi, which probably did not use natural gas, they were probably using propane. With prices moving higher, the arbitrage has probably now shortened out or narrowed down, making it very, very competitive for players like Gujarat Gas in the industrial belt of Morbi itself. So I think that's one trigger which is probably working in favor of Gujarat Gas. For HP, BP, IOC, again, I think the expectations in terms of Singapore GRMs, which have remained relatively stronger, the expectations in terms of refining margins being strong, the expectations in terms of the pipeline or the transmission revenues remaining strong and stable going forward as well. And let's not forget the dividend yield that they give. Are probably acting as triggers. However, I think the risk factor here remains how Singapore GRMs probably move. So it's more a momentum play, in my opinion, which is probably aiding these stocks.
Yeah. By the way, these stocks had a very, very sharp correction as well from the highs. MRP, I mean, they had a frenzied move, from, actually almost a one-way move from... it took 2 years, but from March of 2023 all the way straight up, green candle after green candle. In 1 year, MRPL, for example, got up to about 200, the high was about 290. And then, of course, it underwent a correction, went to about $100, from 100 to about 185 over the next 6 odd months or so. And from a high of 185, dropped once again to 140. So, has very, very violent reactions, both Chennai and MRPL, so to speak, the standalone refiners in that sense. Just taking a quick look before we sort of wrap out at, any other new additions to the mix today. Not really, is there? Steel continues to kind of sort of dominate the price action today. HP is the other one, shining singularly, 6% higher on HPCL. It's a solid one for HP. I mean, IOC and BP are up in the range of about 2.5%, and I think BP is up about 4% or so. Yeah, but HP, really stand out with a 6.25% kind of gain. Wockhardt is the other one. I think there is some fast tracking of its novel molecule which has come through in Europe. So that's about 5.5% higher. And the other one is Craftsman Auto. I mean, about 6% on this one. Coimbatore-based auto ancillary company, has done phenomenally well over the years. So just some names. Idea will go home with about an 11-12% cut. And naturally, I mean, on a day like today, stock number one in terms of, on the downside, number one volume traded loser at this point in time. So 10 rupees 67 paise. Of course, I think the low was... low was 975. So it's basically come up about a rupee or so from the lows today. Otherwise, it's largely on the upside. It's showing up in terms of broader markets as well. 2,200 stocks are higher, and you've got about 955 or 956 stocks which are lower at this point. Any more clarity you would, Mayuresh, await for as far as Idea is concerned? I mean, I think there will be some detailed communication of the relief to Idea, but that'll perhaps we'll only get later in the evening.
Absolutely. Looking forward for that. But Prashant, again, I think the stock has always remained under the lens, considering its excessive debt carried on to its books, as well as the limited circles that it is operating out of. And let's not forget, I think the capex that they need to do to be 5G ready in almost all the circles that they're present in. So I think they have a whole host of challenges in front of them as well. So let's see what the communique promises.
Okay, all right. Down to less than a minute now before the bell goes off for 2025. Mayuresh, thanks very much. We will let you go and start enjoying your evening. Have a fabulous, fabulous 2026. Well, let's recap then. What has been a good end? I mean, an end practically at all-time highs. Tough, challenging year, but the market managed to circumvent or sort of, drift through most of it. Investors' patience was tested, and many, especially retail investors, did come out with flying colors. Okay, so let's see what's led the gains today. JSW Steel, Tata Steel, the steel pack up and about. A lot of the oil and gas plays that we were just discussing. ONGC on the Nifty screen up 2.5%. Reliance up about 2% as well. Banks have had a good session. So Axis Bank almost 2% higher. Kotak Mahindra Bank about 2.5% higher. Not bad over there. On financials, Shriram Finance continued its forward march up 2%, taking its yearly tally. Hold your breath, 72% up on Shriram Finance this year. Titan, 2% with the lab-grown foray being in sharp focus. M&M, Power Grid, BEL, HUL, lots of gainers actually on the Nifty. Not much to complain today. You only had TCS, Tech Mahindra and Infosys, some of the IT names that were on the red side. But otherwise, at least it's a very feel-good screen for what it's worth, Prashant.
Yeah. Nice, right? To end 200 points higher.
Looks nice. No complaints.
Okay, I think that's it. Surabhi, for Surabhi as well, this is the last day for now, Surabhi. I'm not going to say any goodbyes. So I think...
No, I'll see you around in the office. But yes, as far as having the privilege of anchoring fabulous, fabulous programming on CNBC-TV18 is concerned, for now, a bit of a breather.
Yeah.
And I think digital content beckons. So we'll see how that goes.
Yeah, no, absolutely. And welcome anytime, Surabhi, if you want to step in.
Right around the corner, outside the door, like you say.
Well, that's it from both of us here and the team on Closing Bell. Hope we've helped you along this year on shows that we've been on. And of course, we'll see you tomorrow. We are one of the very few markets which is going to be trading. Most major global markets are going to be shut. But as tradition goes in India, markets are very much on. Have a responsible evening, responsible celebrations, and see you bright and early tomorrow morning.
And I'll just add, since I won't be here tomorrow morning, let me take this opportunity of wishing all of our viewers a fabulous, fabulous, healthy, wealthy, prosperous, and peaceful 2026. Thank you so much for watching.